Hello, welcome back. We're going to jump right into it. Today we're moving on to step 4. So, just a quick review. In the previous, we were talking about the accounting cycle. We covered analyzing monetary business transactions. We talked about journalizing the transactions, which is what you see here. Journalizing. This is the journal. Okay, just a piece of paper. You write down what happened after you analyze the effects of the business transactions on the elements of the accounting equation. Okay, so that's the journal. And then we talked about in the previous video, the latest video, the ledger, which is step 3 of the accounting cycle. So after you've journalized every transaction, then you develop ledgers for each respective account that showed up on the journal. So cash, supplies, prepaid. And for the ledger, something I didn't mention last time, they're listed in order of the accounting equation. So assets come first, then liabilities, and then the stockholders' equity accounts. Okay, the stockholders' equity accounts. Could you rearrange these in different orders and stuff like that for like homework problems and stuff like that? That's fine. That's it. Who cares, right? Everything is computerized now anyway. So doesn't matter what order you put them in, as long as the amounts are transferred correctly to the correct accounts. Okay, so then you, as I was saying before, you prepare the ledger here, and then you have a running balance. After all the transactions for the period are done, you have a running balance for each respective ledger account. So cash has an ending balance here of 15,200. Accounts payable has an imbalance of 2,500, and so forth. Okay, then after that you move on to step 4. Step 4 is the vanilla trial balance. Okay, before any adjusting entries, before any closing entries, you have to prepare a vanilla trial balance for the normal transactions that occurred throughout the period. Okay, from January 1st to December 31st of whatever year it is. Let's just assume it's a calendar year and it's perfect. Okay, so these are all the transactions, and based on those transactions, we developed the ledger and came up with the ending balances in the ledger for each account. So how you prepare trial balance is start with the name of the company. Then you have trial balance. It's not a financial statement. It's just called trial balance, and this is the vanilla trial balance. Okay, and the date of when the period ended. Okay, October 31st, 2017. In this case, for this example. All right. Then you have all these accounts. Okay, and they come from the ledger. Okay, you can get them from the ledger or your chart of accounts, whatever the case may be. Okay, as long as it has a balance in the ledger, then you can transfer here on the left side. So if you notice, it matches the ledger: cash, supplies, prepaid, insurance, equipment, then notes payable, accounts payable, unearned service revenue, common stock. And it goes in order of the accounting equation. You have your assets first, liabilities, okay, then your equity accounts come last. Okay, your equity accounts come last. Okay, so you list all the accounts that you used that appeared in the journal that you posted to the ledger. Okay, so you can basically go from the ledger here and get all these account names. Okay, then you have a debit and a credit column. All the trial balance does is ensures that your debits and credits equal each other. Debits and credits equal each other. Now, if these two numbers are not equal, then you have a problem. Now, they can be equal, and you can still have a problem. Okay, but for the most part, if they are equal, then you know that you're on the right path. Okay. Unless something down the line happens and then you figure out you made a mistake somewhere. Okay, we'll see. Okay, so here cash is listed. It has a debit balance on the ledger, an ending debit balance of 15,200. So we transfer here as on the debit side 15,200. Now you got to be aware of the normal balances of these accounts, right? Supplies has a normal balance of debit, and in the ledger it has an ending balance of 2,500 debit. So I transfer that on the debit side. Prepaid insurance, same. Equipment, same. Okay, these are all assets, so they should have normal debit balances, and that's what I did here. Transferred it from the ledger. Okay. If I get confused, I can just go back to the ledger and see that there is a debit balance in these accounts and just transfer them that way. If it ain't broke, don't fix it. Then I go to my liabilities. Should have a normal credit balance, and they do in the ledger, so I transfer them to the credit side. 5,000, 2,500, 1,200. Then I move on to my equity accounts. We have common stock, 10,000, credit balance 10,000. Transfer that to the correct column in the trial balance. Dividends is a different story. Remember, it goes under equity, but it goes the opposite. So it should have a normal debit balance. So in this case, Pioneer Advertising issued dividends, so dividends increased by 500. Remember, this is the vanilla trial balance, okay, before any adjusted entries, before any closing entries. And then we have service revenue, follows the equity. It's under equity, 10,000 credit balance, so we transfer that over as a credit. All the expenses are still under equity, but they decrease equity, so they go the opposite way. So they should have normal debit balances. In this case, 4,000 for salaries and wages, and rent expense 900. Okay, so those are all the debits and credits. Double check this to make sure that the debits are on the debit side and the credits are on the credit side, and the two numbers equal each other. I don't see any issue. I believe I did my work correctly in the journal and in the ledger, and the numbers equal. So I am done at this point. Okay. Now, some things about the trial balance, and I like this slide. Okay, trial balance. The trial balance, all it does is ensures that your debits equal your credits. That's all it does. Okay, nothing more, nothing less. A trial balance is going to balance if all these things happen. A transaction is not generalized. Okay, if a transaction is not generalized, then that's fine. It'll still equal. Okay. Let's say I forgot to generalize that first transaction of cash and common stock. 15,000, 15,000. If I didn't book 15,000 as a debit and I didn't book 15,000 as a credit, then it was never there. It's a zero. Nothing happened. It's like nothing happened, right? So it will balance for the rest of the transactions, assuming I did those correctly. A correct journal entry is not posted. Okay, that didn't happen. Okay, it's not posted. That means to the ledger, right? So maybe I journalized it, but I didn't transfer it to the ledger. It'll still balance. Okay, it'll still balance. Okay, it's the same as what happened in step one and one. Okay, it's like it was never there. A journal entry is posted twice. That's fine. Okay, as long as the debits equal the credits, then that'll be fine. Let's say for that initial journal entry, I think it was 15,000. The figure was, that's when we issued common stock. Cash 15,000, debited. Common stock 15,000, credited. If I do that journal entry twice and I post it twice, then everything will still balance. That's still 30,000 debits, 30,000 credits. Everything is fine. So the trial balance will not show me. Will still balance even if I book a journal entry twice. Okay. Incorrect accounts are used in journalizing or posting. Okay, who cares? Incorrect accounts are used in journalizing or posting. How is that going to help me? As long as the amounts are correct, the monetary amounts are correct, then the trial balance will balance. Okay. That's all there is to it. Incorrect accounts. So maybe I was supposed to debit cash, and instead I debited equipment. Or I was supposed to credit accounts payable, and instead I credited notes payable or something like that. That's fine. It'll still balance. It will still balance. As long as the numbers are correct, it'll still balance. How about offsetting errors are made in recording the amount of a transaction? Again, it'll still balance. All these things can occur, and the trial balance can still balance. Okay? All the trial balance does, again, and I need to stress this, is ensures that your debits equal your credits. That's all. Okay? There are some tricks and tips for a trial balance. If the numbers don't equal, We'll get into that more in future lessons. But for now, I will leave you with this video, and hopefully this makes sense to you all. So I'll see you on the next video, step 5 for adjusting entries. Peace.